We should be live and good to go. My power just went out shortly ago, so hopefully this live stream holds up. Right now, we have Taiwan Semi here coming out with earnings and crushing it, but we're seeing some weakness early on in chip stocks here. Is this an early warning? Sell the news? Or is this going to be another opportunity to reinforce the AI chip demand right now and a potential bounce opportunity? We have significant compression in the ES and NQ higher time frames. We'll talk about that and much more this morning. Let's go ahead and get to some of the data here. We had some data came out just moments ago, and you're seeing here core retail sales coming in negative 0.2%. less than flat, which was the forecast. Initial jobless claims coming in 208K versus a 216 forecast and 216 previous. Philly Fed manufacturing index coming in 41.4 versus a 12.7, 10.3 prior. And retail sales here month over month coming in 0.2%, which is in line with expectations right now. So how does the market respond here? Good morning, everyone. Good to see you all. At the moment, no change. No change overall. We're still right where we've been. And this, let me see here. I'm going to change this back to a monthly here. This is currently the monthly Pivot Boss pivots right here with the monthly CPR. And you can see back-to-back months of compression. If we go back to the first week right here, that day was May 8th on a Friday. That close, if you take it to the left here, is exactly where we are. That close is that red dotted line, and it takes you right to that day. We've gone nowhere since that day, which is over 2 months ago, and it's built up tremendous compression here. And while the range was rather wide to begin with, it gave us a wide range to work with. Since then, it's been very, very overlapping and rotational. And that's building up energy in such a narrow range that it can't likely be contained for much longer. So we're going to see some significant expansion out of this range at some point, likely sooner than later, which brings us to some story stocks. Let's do this real quickly here. Taiwan Semi. Earnings here. What you'll notice right now, gapping down here. This is 402.85, 403 right now, heading into the RTH Open. Yesterday's close 419.48. That's going to be below the previous month's low. The previous month's low and an uptrend here. How does the market respond in that scenario here? Typically speaking, to get into this zone, it's marked green here because it tends to be a bear trap zone. You drop into that area, find rejection, and we could be looking at a push right back up. So today, how does the market respond? If the early drive is barely down, and then you start to bounce and recover back above the previous low here, we could be seeing an attempt to gap fill back up into the range. That gap fill could then lead to a bounce over the next several days. So to come in here, and let's look at news here. 77%. Quarterly profit rose 77% year over year. Beats, guidance, all that. Strong quarter performance, this and that, right? Well, now you're going to get that price here this morning at the open at a discount to the previous month's low. That in and of itself can snap it back to the previous mid, let alone obviously fill the gap. Just get it back up within range. You already have an existing range that's developed already here. Do we even snap back to 480? Is this an opportunity here where you could perhaps get from 400 back up across the range, perhaps even toward 500? That's incredible to think about, that you could still get a 25% move perhaps out of this thing in the best case scenario near term. And of course, I know for those of you in the trading room, you know, I've been known to underestimate the power of some of the strength here that we've seen. You know, normally we may look to return it back to price, which is what I'm saying right now. Right here's the trap. You return it back up to recent highs. But what we've seen is the ability to push beyond those highs and extend. Not only are we getting back to highs, we're pushing beyond those. So right now, at a 400 zone, there could be a return back to the highs, but then extend beyond those highs. Are we talking 400 to 550 up ahead for something like this again? So this could provide an opportunity here at the open. And if it doesn't, if we do not begin to see any kind of reaction back above or recovery of that low, and instead we dive, that could be a significant warning up ahead for the broader market. So just wanted to talk a little bit about Taiwan Semi here. Yesterday, ASML, again, with good earnings, same deal. So they're saying the exact same thing, both of these companies, which is in line with what IBM said the other day. Hey, we're sucking here because they're doing great, and the money's being directed that way. And so ASML, TSM is saying the same thing. We're doing great because the money's being directed our way. They're not. So you can see that story continues to be playing out here overall. Okay, let's take a look here at the markets now. How does this play out here this morning for the NQ? Well, right now, we got to see first, is this thing going to get a breakdown? I have been very, very against the directional trade lately because we haven't seen directional movement out of range. So for the market to already have 67.5% of ADR, 436 points of range, it's moved from here all the way to the edge. Is it easier for this market to then see further extension to the downside, or is it easier for it to kind of find a pivot low and bounce back up within range? Right now, that might be the course of action. If we drop down to, say, 29.2 here, does it then bounce back up to 29.6 for a 400-point rotation back up within the range? Basically, something like this here, where you're kind of back and forth within the range. Let's drop down to the 60-minute time frame right now. This is the hourly chart with the weekly S3, S4 zone and R3, R4 zone. Weekly. So this is the weekly VWAP right there. This is weekly S3. And you can see a very flat weekly VWAP right now. So that tells us we have been mostly... Is this weekly right? Let me just double check here. Yeah, weekly. We've been mostly flat. Look at last week. Last week sideways. Look at the edge play here. The week before that, same thing. Here we are right now. We're seeing a flat VWAP for the week. We could see this thing rotate down toward these lows. That could lead to a rotation back up in a rotational market. So this is in line with what we're talking about here just a moment ago. Here's 200. Here's 600. Value is actually 680 right there. So let price drop. Let price maybe take out these lows. Ideally, take out those lows right here. Let it drop down into this zone here. Maybe we don't get as low as this. And then it may turn back up and you get a rotation back to VWAP up above. Maybe you get a little bit of a move here and then we fall back, and that's the game. So watching in this zone right here, which is going to be somewhere between 100 and 200 for the NQ, and then snap it back to 600 to 700. Something like that could be in play for the NQ. If you look at the ES, I want to drop this down the ES to the 4-minute time frame here. Yesterday was great. This is ideal in many ways, where you get a trading range day. And let me come over here. I'm just going to take everything off here. You get a trading range day here. And this is what we noted to begin with, right? Right here, when we were pre-market, it was like, hey, this is sideways. You have to let it get down into here or get up into here. And that's what it did. It waited. It went up here, found the selling. Boom. Multiple sells. That one back to VWAP. That one back to VWAP. And then across the range. Over here, we're really looking for that one to be taken out. You take out the low. That's what we're talking about this morning. Take out the low, and then watch how this turns right here. This is tremendous because the turn, bang, right there. That's a huge pop in a very short amount of time. And then the next couple of, 8 or 10 minutes is sideways with a failed new low, recovery of S3, snap back to VWAP, snap back to R3, R3 back to VWAP. Great movement if you're patient and wait for the market to come to you. So some great movement here. And if we're looking at something like RTY, look at RTY yesterday. And I can take off, say, something like this and just make it clean. But we offered this to our Pivot Boss Masters members here earlier this year, the pro version of these, and that shows the participation at these edges. And typically speaking, you're looking for a rejection here back to VWAP. A rejection here takes you to S3. If you can recover S3 back to VWAP, back across. And when you have a trading range market, you get plenty of these throughout a day, in many days. And then you get something like this today. You see the directional conviction here for RTY? That changes you more to a bearish trending market. This is more you're looking to fade, but when you start turning down, you can't really try to bounce it every single time here. So that's when we flip it to a trending mode here, and now you have a different set of goggles to look through, right? So now, what we're looking for right now at the moment in RTY is still the previous session's low here. That's the most important. And you can see here, yesterday, this thing held. We talked about price pushing through that midpoint, and it tried. And it didn't drop, didn't go nowhere. It just went straight middle 50%, and there we are again. We could continue to be rotational. So continue to look for those rotational opportunities in these markets. Okay, I wanted to say good morning, everyone. Hopefully everyone is doing well this morning. Some early hiccups here, but nothing bad with regards to the storm. It was, I'm doing pre-market prep here, and then you hear a little thunder, starts to pitter patter with some light rain, and then power goes out. And then there's the rain that comes, and was like, whoa, nothing even happened yet. But we're back up and running, all good to go, and a lot of compression here. I want to continue to emphasize the 2+ weeks of compression we've seen. We may finish this thing 3 full weeks, but look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 days. How many days do we want to go? From that day this way, 16 days. And just for giggles here, we're going to look up what a 16-day compression looks like. Oh, not too bad. Right there. 76.5%. That's not bad. Let me count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Let's go 10. Let's go 10. Boop. There. 2 weeks. 80. Not bad. That's what's crazy about this range, which makes me a little bit more nervous as well, is that whenever you have a lot of volatility within a small confined space, it's not usually very bullish. But I think what's happening with this market right now is clearly the AI engine is strong. Boom. But you're running into $80 oil again. You're running into, is this thing going to see more of a hawkish Fed up ahead or what? This move right here is legit. So that was our transition day. When you get a transition day away from a market structure level, you are now inside that next highest distribution. So with a 3-day compression here, this might be ripe for a failed new low. Look for a push down, a rejection, a failed new low, and then a push into 84s up ahead. How far down does a failed new low take us? Maybe it's 77.5 or 77 to 84, and now you're looking at a 7-point bounce. So this is a great compression. Look for the next pullback and bounce, and that could be a tremendous move up ahead for crude. That might continue to provide a bit of headwinds here for equity futures. This is the YM. Look at the YM right now. In the higher time frame, 53K. A lot of compression right here. Yesterday I mentioned if this thing was going to be bullish, it was going to push through 53 and we're going to open up the upside. And it tried multiple times with multiple rejections. And this is your previous month's high. So it tried to stay above it, it failed, and the previous month's high rejection, still sitting below it, 53K rejected. We're still technically in an uptrend, so we could easily see the lid come off and this thing pop up. But you can definitely see that there's a little bit of reaction here and rejection, defense by the bears. Let's drop this down to, again, the lower time frame here. This is your 60-minute chart. Look at the rejection here. This is the one I noted earlier this week. Boom. This rejection. Boom. This rejection here. Bang. And now, right now, today, pushing above 53 and again seeing a rotation back down. That's a lot of reaction there against the previous month's high. Look at it right here in an hourly time frame. So whenever I get questions about, hey, which pivots do I use? Do I use these pivots or those pivots? Daily pivots, weekly pivots, monthly. They're going to have relevance depending on which one's being tested at which time. This is clearly the previous month's high right there, but it's also a previous week's high combined. And you're getting a double dose right in that area, and bang, a reaction. This is also the previous month's close, and a previous close right there can tend to draw price back to it over and over again. You reject there, previous close here. And you can just see how it just keeps coming back to that level. You can just sit with a couple of pivots and just play those. You can also say, okay, you know what? We're going to go. Well, that was a quarterly. Here's your monthly right there, which is the same thing. Yeah, there you go. And let's switch this that way. They're the same thing, monthly and quarterly right now. So the point is, you can see where participants are putting their money to work. And there's a lot of compression right now. This is starting to build out a head and shoulder style pattern. But like I said, in super bullish markets, head and shoulder patterns can break to the upside. They can. But it definitely shows you who's positioned where and where the edges currently are. If you start to see price push through this level like that, you're opening up the stops through this zone. You're going to get a push to a new high. If you continue to see rejections, at some point, we may have to come down here and auction below that low to try again. So again, fading the edges. You're working the edges right now in this market. Okay, let's see. I wanted to get to Bitcoin for a moment. Bitcoin again, not able to get going to the upside. And this is what's most devastating for Bitcoin right now. I'm going to call it devastating. Because it's a stealth devastating. It's not like many people are perhaps even seeing this. But it's that blue line, which is what we've noted before as market structure edge. It is 65,520. Look at it here, look at it there. This is yesterday. Yesterday was a digestive day. You look at it right there, digestive day. And we can look at this right here and actually quantify it. 44.5% of ADR yesterday. 44.5% of ADR. And we can also look to see that is the bottom 0.4 percentile of the last year of trading. I mean, that means you can look at a year of data, and it's basically the lowest day, save for maybe a couple, or maybe one, over the last year. Yep, it's the second to lowest one. The other one is right there. This is the other one right there, and that's April 3rd. Look at the next day. The next day was a massive day, 3,000, or at least, nearly triple that one. The point here, And let's go back to April 3rd, which was that day. That was that one right there. The point here is that type of digestive day, combined with the fact that it couldn't find acceptance above the blue line, oof, that's bad. That's stealth bad. Right there, digestive day, and today is already stop run day, and it's barely even getting going right now to the downside. It's still 48%. It could easily drop down to 62K today and just already have been a move. So this is stealth really bad right now. Yeah, this is going to be incredible here to see what happens in the next couple of days when we have to look to another Michael Saylor Monday, and did they sell or not? It's going to be interesting. Are they forced to sell? The thing about strategy and Saylor is the longer price stays at these levels, the longer it could just sit right here. That you have to start covering debt payments at a loss to your cost basis. If it can snap back quickly, you're good to go. You know, as TRC goes up, all that. But at these prices, or worse yet, lower prices for longer, oof, bad. So just some thoughts on that. In order to get this thing going higher, you need to get through 66K right now, short term. But even then, market structure is 75K. That's how bad this thing is right now. Okay, now gold. Gold also been very bearish since the Fed came on deck, very bearish since the war opened up, and is now very heavy on the 4,000 market structure level. It was very heavy on 4,500 over here. It was very heavy on 5,000 over here. Drop, right? Drop, right? Drop. It's hard for me not to see 3,500 coming up ahead as the next market structure passageway, but you don't get there all at once. You can. You go at least halfway, 37.50. And if you go 37.50 very quickly, it increases the odds of continuing to 35, even in the event that you pull back to the market structure edge that was violated at 4,000. So we're starting to push through 4,000 right now, 39.99.70. You have a downward sloping wedge or descending wedge. Those tend to break to the downside. Gold is looking bearish. 37.5 right here. If you hit that level, which is also the midpoint or the 50% extension of that key range, it's going to open up the odds of continuing. This is heavy. It looks bad. It looks like we're about to drop just like we have all the other times. And why do I keep pointing to 3,500? It's the OG breakout point. Remember back here, we had that 500-point rally. Boom. And I said, that's it. That's it. That's the market structure now. We pulled back to the middle. We're going to be in that range for a while. But now we know it's 500-point market structure distributions. And that's why we knew right here, as soon as we break through 35, we're looking at 4,000. Boom, straight away. And then some. And because we went and then some, we knew 4,000's the hold point for not only 45, but maybe 5,000. Market structure took us up. Now market structure is taking us down. 3,500 to clean that up right there. That could be next. Heavy on 4,000 right now. Okay. Good morning. Nifty. Let's take a look at a few Nifties here. I want to bring up, let's see, we have further compression in the actual Nifty here. 1, 2, 3, 4, 5 days. Look at that compression. Here's your initial drop and bounce to give us a range lock for the week. This could lead to an expansive week next week, which is going to be something to keep an eye on. In terms of Bank Nifty, I haven't looked at this one in a little while. Let's take a look at this one. I'm going to take this key range off here. Okay. Bank Nifty. All right, so I'm going to bring this up like that too. Okay, so we pretty much have traded perfectly off of our 4,000 point market structure distributions, which we put up at the beginning of the year. In January, based on that impulse move, I said 58K, 62K, 54, and 5,000. There's 5,000. There's 54. Right now, we're at 58. 58 was prior support, and we have got a bit of a range right at 58. We got compression. That compression could lead to expansion up to 62, or it can drop us back within range back to 54, which is where we've been anyways. We could be looking, and Coco has made her entrance. Good morning, Coco. So now that's the compression right there. Do we get a drop within range back toward the mid, back within this structure, or are we going to come back and rally here? At the moment, this market has been good about bouncing back, but to get into this upper market structure, it looks like it's already been defended time and time again. If we drop into, say, the 60-minute time frame, you start to get perhaps a bit of a rounded top look to it. This rounded behavior may suggest, a drop back toward 54. But when you're here and you're compressed, it could go either way. Are we going to take a gap up and start to run? Do we come up here and test and fail? And now you're going outside down, So let the market come to you, but there's clearly some buildup of energy. If I had to pick direction, I would say right now it's heavy up here at a major market structure edge, and that could influence a return to where it came from, which is the recent lower market structure edge. But again, what if we gap and start to run? I mean, we open it up and you start to see expansion. But right now, that rounded price action at this zone might set up a bit of a rotation back within range. The other one you mentioned was CNXIT. And let's bring this out to a daily for a quick moment. This is a quarterly pivots, quarterly CPR, lower value relationship, and now we've pulled back and we're hitting the quarterly mid in a downtrend, in a lower trending channel. We got a great little reaction here that popped us back up. That's a perfect trap back to the mid. That's how you draw it up. And then after that push, bears would tend to want to bring it back down unless they can find expansion through that 29.2, which would then open up the next level up. So that's kind of the structure right now. What's going to happen? The key level to watch here is at 29.2. Let's see what this looks like on a monthly basis here. Those are the pivots for the month. And then this is also the pivots for the month here. And you're at about the same level. You're right at the monthly mid. Quarterly mid is there. Clearly a really good reversal. Mean reversion back up, but downtrending here. Interesting. Yeah. This is what you would expect. You're going to end a month or a quarter near the low. You're going to expect a snapback, just like we did last time. Now that you get the snapback, what happens? Do we rotate within primary trend per normal, per usual? That's what this trend would suggest. Or do we break and now make a move higher? The key level to watch, 29.2 right here. Good morning. Good to see you all. Welcome. Shutter, good to see you, Shutter. BNF. Let's take a look at BNF. Let me know if this is the right one here. BNF. This one, cheaper stock here. But I do like when you're in this zone right here. This is a good structure that I do like. And I'll tell you what that structure is right now. It just has to do with price. And it's basically you have a clear down move. Boom. Then you hit this low. And you bounce from that low to hit that pivot high. And now after time, you've come down to now test prices below that low. This can tend to be one of the best opportunities for a lower low reaction that takes you back up to recover this low and then snap you back to the recent pivot high. Like this, like right here, lower low, boom, and then you snap back toward that pivot high. Just missed it there. Over here, red there, boom, back to that prior pivot low. Boom, that's what it did, and then some. So you can see that that game plays out time and time again. Here's a high, you get it a little higher, snap back to that prior pivot low. Didn't quite get it there, but I mean, close enough. Not saying that it's ready now. This one looks like it's still in the oven. By the way, we got some brownies we got to make here. It's still in the oven a little bit right now, but soon there could be a reaction, a major reactive moment, a major participation day or week, and that could lead to a pop to the upside. I know this is a weekly bar chart, but just in general, not a bad spot to watch for a longer term play. Now, from a shorter term perspective here, I guess shorter term being daily time frame here, you do have a lot of compression down here right now. You had a bit of a participation day here that played out, 181% of ADR. That's not bad. Does that start to lead to a little bit of that participatory week we talked about, or some sort of recovery here? Yeah, not bad overall. I mean, it depends on what type of duration of play you're looking for. You know, are you just looking for something shorter term or something with more longer term potential? This compression could give us a little bit of a short term pop, but really meaningfully so. If you have a little bit of time here, this thing could provide a nice, meaningful recovery once, you know, it gets really through 7. All right, good stuff here overall. I wanted to take one quick look back at the NQ before we head out here. Again, the NQ has been very rotational, up and down, up and down. Up a day, down a day. You know, down a day, hold, up a day, hold, down a day, up a day, up and down a day. Today, you know, so it hasn't been seeing that expansion. Like I said before, if we get a little bit more weakness to begin the day, look for a snapback to the upside or vice versa until expansion, true expansion, is seen in this market. Chip stocks, are we going to see some gap fills this morning? A lot of gaps down with a rotational fill back up. Those early gap downs, you know, might lead to early weakness, and then you start to see the fills start to take hold. We'll see how that plays out. All right, everyone, thank you very much for joining me here today. We'll be back at it in our Discord trading room here soon. Thanks for joining me. Give me a big thumbs up, a like, subscribe, all the good things, and we'll see you soon. Take care.